Welcome, everyone. I'm the editor of Move Smartly, Army Desai, and I am back here with our monthly roundtable where we talk to my co-host, John Pasalis, president broker of Velocity Realty here in Toronto. Hi, John.
Hello, welcome back. Hope everyone had a fantastic summer.
I did. It feels like really like back in school.
Yeah,
Steve, our bestie, introducing Steve Soretsky is always with us on our panel over in Oaken Realty over in Vancouver. Hi, Steve. How's it feeling?
Good to be back. John, you're always looking better dressed than I am.
He's always looking better dressed than I am.
I don't know. Yeah, John's pretty dialed.
He's the peacock of the operation.
There you go.
Um, yeah, as I said, it's feeling like we're very, very busy. A kind of a back to work and a back to school fever in the air, especially as many companies are asking their workers to go back to the office.
Hmm.
So I'm feeling like a little bit more of that sort of energy and nervousness. I'm wondering how the real estate market's reacting to all of this. Um, and whether you're seeing any people wanting to change their real estate moves now that they might have to go back into the office. So, what's the market doing? How have the sales been looking like and the prices? Maybe Steve, we'll start with you in Vancouver.
Yeah, I think that, John and I were just chatting before we hit record, but I think it's the sort of theme is higher volume on lower prices. Effectively, what we're seeing is like sellers. I wouldn't say, I don't know if capitulating is the right word, but I mean, I think they're just coming down to reality, which is like you can only sit on your price for so long. If you want to move and you don't have necessarily a unique or special product, I mean, you have to lower your price. And I think those lower prices are filtering through, and ultimately buyers are out there getting better prices and willing to now step up. I think we were kind of in a market that was frozen for 2 or 3 months throughout like the whole tariff onset. And I think what we're seeing now is you're seeing month over month transactions continue to sort of tick higher. So for the month of August, we had sales, I think were year over year, were up 3%, very minimal, still below like long-term averages. But I think the big thing is like sales are picking up. If you kind of look at it like historically, um, it's almost like a little bit like it's low, but we've had lower years, 2022, 2018, 2012, 2008. So like, yeah, I mean, it was a slow August for historical context, but overall picking up. I think one trend that we're keeping an eye on is the number of, so new listings are starting to slow down a bit, but cancellations are like very high. So effectively what you're seeing is a listing cancellation tells me that, oh, you tried your price, it didn't sell, you cancel it, you take it off. And most people at some point, whether it's this fall or next spring, will retest the market once again. So I think that's a metric to keep an eye on is listing cancellations are very elevated.
Yeah, one thing I actually did a video and I think I posted this in my report that one thing I noticed with condos is, I mean, I looked at some of these cancellations and a decent number of them are actually just canceling and renting them out.
Mm.
And because they can't get their price, you know what I mean? So I've noticed like, and that's been going on for a long time, but this year, I can't remember the stats off the top of my head. It's like significantly more relative to last year. People who tried to sell, couldn't sell, and just rented it. And this is all basically um, loss aversion. You know what I mean? Like even if in some cases the people doing this have actually lost money because they bought at the peak, but even if these people bought 10 years ago and have made a gain, and I think we talk about this on the show, in a market like this where prices have fallen, people don't look at their sale as a gain. They kind of compare it, they anchor against the peak price and think, well, I could have got 200 grand more if I sold in 2022. I'm just going to rent it out now, right?
Yeah.
So
Yeah, I'm seeing that firsthand with
But isn't that
some.
costing them a lot more right now? Rents are trending down. So even that cost of carrying, at a loss is increasing.
well,
That's not changing any minds.
potentially, like again, I
Mhm.
think it depends on some of them. If you've owned the unit for 10 years, like not everyone, like we talk about investors, I think the
Mhm.
common narrative is they're these over leveraged, they have tons of units and high debt. Yeah, okay, some are super leveraged, not all are. Like some people who are renting their condos now bought them 10 years ago and they have like $150,000 mortgage on them or two, you know what I mean? So not every person who owns and invests is overly leveraged. You know, now the question, so they're not necessarily bleeding cash. The question is that the best return on their investment? I mean, that's another, you know, obviously debate, but they're not necessarily all deeply cash flow negative. You know what I mean? Like the people who really are and can hang on are fire sailing their units, right? And I talked about this on another video, and I'm going to maybe try to do a report where we're seeing some units that are selling in buildings for like 20% less than what a similar unit sold for like a year ago. Like just these outliers, like just these distressed sellers who just need to dump their units.
What type of areas would that be, John? Would that be like right in the downtown core of Toronto, or would that be more like outskirts? Like,
I think a lot in the downtown because that's a lot of like small units are down there. So I've seen a few, and I kind of ran some stats to kind of pull these out. So I'm going to see if I can do something. But anyhow, yeah. So I mean, going back to the stats for Toronto, like very, very similar to Steve, you know, sales for low-rise homes are up about 8%. Condos are down maybe 2%. Inventory's up a little bit. But prices are down year over year, both for condominiums and for houses. You know, we were talking before the show. I mean, I said like the one thing I'm slightly surprised by is kind of how even soft the decline in prices even in the low rise segment. And by low rise, I mean like semi-detached townhomes. I thought that it would have been a little bit more resilient because you know, it's kind of the stock that we don't really have. But yeah, it's just even that market is a little bit soft. Obviously, some segments more than others, but we're seeing, you know, downward pressure even on low-rise homes. Like they're down 5-6+% over last year, 7% in some areas. So, and as Steve said, yeah, I think we're probably going to see a little bit more activity this fall. Like I think, you know, the momentum we've been seeing the past couple of months, at least for low rise, is a few more sales. But again, as Steve said, I think it's like people jumping in, looking at lower prices, you know, and trying to take advantage of that. Where it's not a boom in demand where everyone's, you know, 10 bidders on a home type environment. Like we're not seeing that.
John, you know what else I'm seeing is like firsthand is we're seeing everyone just taking less to facilitate a transaction, which is effectively saying like you're a move up buyer. Okay, so like you negotiate on, let's say, a detached house. You get a pretty good price on it, subject to the sale of your condo. And now you're like, okay, I've got my house that I want. I got a pretty good price on it. And now I got to offload my condo now because I got 30 days to do that with my subject to sale condition. And so they're just taking less for that condo. They're just like, blow it out. Let's move it. You know, if I take 30 or 40,000 less on my condo, but I got 100 to 125 off my house, like net, I'm still better off. So, and then obviously once that condo seller then sells because they want to move on with their life, like they almost like effectively reset the building to some extent, right?
Yeah, 100%. And one thing you mentioned, I think is super interesting. I mean, and maybe it went over people's heads that we're actually seeing places sell subject to or conditional on the buyer selling their existing home, which was unheard of a year or two
The
ago.
return of the condition.
Right? Like, and again, I think this is, we're starting to see it because especially in some areas that are very soft, the seller will take any offer rather than no offers. You know what I mean? And yeah, some people are doing that. And it is a smart strategy for some buyers. Like, you got to be cautious. If you don't want to sell your home first, you got to be risk averse because you don't know what price your kind of existing home is going to sell for or when it's going to sell. So yeah, we're definitely seeing that. I don't want to say it's the common trend, but in some areas we're definitely seeing more of that.
Yeah,
Mind
it's
you,
becoming
John.
fairly common.
Sorry, Steve, go ahead.
No, sorry, I was just saying it's becoming fairly common in Vancouver where you're just seeing a lot more of them. I think just people list it's hard to pinpoint, like especially again when you're moving up the ladder and you're relying on the equity in that existing property. It's just so hard to pinpoint valuations today in like a very sort of transitioning market where things have been really soft. And so like, to take that amount of risk and then all of a sudden be stuck with like potentially two properties, most people aren't willing to take that risk. So again, to John's point, it's either you sell first, which I still find a lot of people don't want to do, specifically when you're with like, a young family that has like kids in school and things of that nature. So we're seeing a lot more, okay, let's go out and tie up a property that we like first and try to make it contingent on the sale of our existing property.
It's interesting, John. I remember Philosophy when we opened in Leslieville about, was it 2010?
Mhm.
The market was already starting to gain, of course. Conditions were common, but it
Mhm.
was conditions on financing, home inspection,
Mhm.
and the other. So I assume they're all back.
Oh yeah,
But
yeah.
seeing this condition on the actual sale of a house, how common
Extremely.
was it even that? And
No,
even
it's not.
then,
It hasn't been common for an incredibly long time. I mean, I
I
can't,
see.
it's not, and it's, I don't want to say it's very common in the GTA.
Hmm.
Like it happens. You're not getting laughed at anymore. Do you know what I mean? And
Hmm.
again, it's certainly more common in very slow segments and some of the suburban markets that have no showings. You know what I mean?
Because
Um,
people used to use bridge financing, and that was enough to sort of carry them over. But
Yep.
now the fear is you're porting two mortgages for much longer than you would want to.
No, no. The problem is to get a bridge loan, which basically is a loan. Imagine you bought a home and you're closing on it in October, right? But your existing home doesn't, you don't get your money for that until November. So there's an overlap. You're gonna have two homes for a month. A bridge loan covers that. But in order to get a bridge loan, you have to have sold your current home. And the problem right now is people are worried, what if my home doesn't sell? Or what if I get 100 grand less than what I was expecting to get? So this is what the condition that Steve and I are talking about mitigates. You basically bought, you've locked in your purchase price, and now you're basically saying, I need to sell my home. I need to know exactly what I'm getting for how, you know what I mean? And you basically do not firm up on your purchase until you get the price you need for your sale.
Whereas 15 years ago, people were still confident that
Yeah,
even
exactly.
without that, this will sell
Their home will sell
in
within a
a
week or
month.
two
Yeah,
or a month. Yeah.
yeah, at the most.
Yeah.
Interesting. So is it safe to say the investors are definitely not part of this uptick in sales? Is any of this activity being driven by that segment coming back in?
Um, Largely no. Like the investors in the market now, I'd say a little bit more sophisticated. Like, people who are buying lots to build fourplexes or sixplexes. So that type of investor, but that's a different type of investor. Those people are
Mhm.
like developers, right? The person buying the 500 square foot condo as an investment, yeah, no one's very rare. You don't see that very
Yeah,
often.
I'm not seeing it either.
No.
So, Steve, back to the buyer demand then. I mentioned at the top that there's a lot more return to work being forced here. 4 days. Some even talk about 5 days. I'm not sure what it's like in Vancouver. Are you seeing anyone rethinking the decisions that we made in this COVID era where people just sort of spread all over the place? Have you heard any buyers sort of get in touch about that yet?
Pretty rare.
Mhm.
Yeah, I don't think the return to office in Vancouver is really that prominent as let's say the GTA. I know like the Ontario government man has come out to, oh, we're going to mandate people back to the office. I don't think we've really seen that. Maybe it's just more like the relaxed West Coast vibe over here. But I mean, I think that what we're still seeing is a real softness downtown in the downtown core, the condo market. Where you typically would see sort of young families and things of that nature that would be sort of living downtown and then going into the office every day and just walking there in 7 minutes. Like I think we're still seeing a lot of them are just opting for more space out in the suburbs. But I would say that if you look at the market as a whole, the sharpest corrections ultimately, to no surprise, have been the markets that went up the fastest, the quickest, the most during the pandemic. I mean, those have reversed the sharpest.
And
Yeah.
John, what do you think in the GTA? How do you think will this have any impact? If
I I think it is having a bit of an impact. I don't think it's impacting I don't think people are selling their homes yet, but certainly what I've been hearing is like people getting more worried about the impact it's going to have on their cash flow because, all of a sudden once, if two people were working from home before and all of a sudden both need to commute, I mean it's going to add to their commuting and transportation costs. Like in some cases people downsize to one car. Now they got to pay for Go. Now they got to pay an extra car. Like it's adding to their transportation costs. I think this is more of what I'm hearing from people. It's that all of a sudden they got to spend a bit more, and it's obviously going to impact their budget, but not so much we need to move because we got to go back to work yet.
Gosh, just when you thought GTA road rage was at its zenith, I
Oh my
think
gosh.
we're gonna top the country. I was
Yeah.
just saying that I had to drive. Well, before we were boycotting, my family visited California, a relative out there, and I felt confident driving out there because I have become so used to the GTA. So the LA freeways were like nothing to me. So, and I mean it. I was
Yeah,
very aggressive, very confident. So I'm wondering if people might start thinking about that later on. So we'll have to
yeah,
keep an eye on that.
for
Another
sure.
factor is interest rates, as always. So moving on to that, we are hearing, though, while the bank was keeping steady, that some rate cuts are now expected by most experts. And that's not unexpected as we now see the fallout of the tariffs and other things leading to contractions in the Canadian economy. So what, if anything, do you think that would mean to buyers or sellers?
Steve?
Um, I think that I mean I've said it since like I think we started recording the show this year. I think the biggest mistake that sellers have made this year was reading into all the news article headlines about the Bank of Canada cutting rates
Mhm.
and assuming that that would translate into lower mortgage rates across the curve, which is to say not just the variable rates, which is what the Bank of Canada impacts, but fixed rates. I mean, fixed rate mortgages basically haven't moved effectively all year. They've basically been flat at call it 4%. And so every sort of seller that was like, oh, the market's going to pick up, just wait, just wait, just wait, because like rate cuts are coming, and again, I just don't think we've seen that. I think if you look today, your variable rate mortgage is in many cases still higher than a fixed rate mortgage. So even if the Bank of Canada cuts again, let's say one more time this year, your variable rate it's not going to make any real difference. So I think what we've seen is kind of a stabilization in borrowing costs at, let's call it 4%. And I don't know how much lower we're going to go from here. In fact, I think that we're starting to see some signs of volatility in the bond market across Western democracies, which is you start to wonder like maybe is there a remote possibility that next year maybe it's not 4%, maybe Canadians are borrowing at 4.5 or 5 next year. It's a possibility. I'm not saying it's my base case, but like
Mm-hmm.
I think everybody just assumes that we're going back to 3%, and I'm saying, well, maybe we don't. Maybe we actually go up the other way. Maybe 4 is as low as it
You
gets.
get
So
into a weird world where even though our economy is contracting, there's still so much geopolitical instability
Mhm.
that
yeah,
money's still
yeah.
parking itself.
A lot of boring. I mean, the Canadian government still hasn't released a budget.
Hmm.
And so it's, I mean, running massive deficits. I think that there's a real possibility that, again, mortgage rates for most Canadians could also just go higher. And again, I'm not saying that's the base case, but I think that's just an important lesson. I think, there was the Bank of Canada put out a report, I think last month on the mortgage renewal wall, 60% of mortgages renewing over the next 18 months. The vast majority of those, I think was we'd see about a 20% increase. The biggest basically renewal wall was all the people that were coming off their 5-year mortgages in 2021, where they were borrowing at, call it 1.5%, and they're going to renew today at 4. So there's still a payment shock there. I don't know. I don't have a whole lot to add other than, yeah, things seem pretty stable at 4%.
Yeah, and I tend to agree with you. I think Canadians are just so used to hearing about rate cuts and assuming this drives this massive market rally. But you're right. I think they've all kind of missed it. Even if we get 2 more cuts in the next whatever 6 months, say, we're still going to be like close to 4 for variable. And you're right. I think there's a chance that fixed rates move up. So we're going to probably be in a higher interest rate environment for a while, and it's not going to stimulate housing. I think the way people are thinking is going to happen, and are hoping it's going to happen.
I think it's also worth, like, John is like, okay, let's just assume you get 2 more cuts from the Bank of Canada over the next 6 to 12 months. It's like, well, what environment are we in if they have to cut, let's say, 50 basis points? I
Mhm.
mean, you would assume that the labor market is continuing to weaken under that environment. Otherwise, it's probably not a whole lot of justification to move from here. So I think that's one thing. I know there's been a lot of talk in the media recently about like the softness in the labor market, particularly for like youth, particularly in the GTA market, where I think what you have 10% unemployment in Toronto right
Mhm.
now. I
It's
mean,
even
BC
higher
is,
for you. Yeah.
yeah, BC is soft. And so, then that's obviously influencing the rental market in particular, where we're seeing the rents coming down. So yeah, I just think that sellers that have been reliant on rate cuts, I don't think have really looked past the headlines.
Hmm.
And I think it's been probably one of the biggest mistakes that I've seen sellers make this year.
And a couple factors too, of course, in the GT, there's a lot of concern about the temporary worker taking the youth job. But I've been reading a lot about how engineering students and comp sci students are unable to get that first, well-paying gig. And of
Hmm.
course, we're seeing the impact of AI on those sectors.
Hmm.
And I really wonder if we're missing that story because that will affect home buying a lot more, won't it?
Well, 100%. Yeah. And it's a tough period for this, new sort of recent grads getting into the market. It's if you know a couple people in that space, it's super hard to get a job. So I
Mhm.
definitely feel for that kind of
Yeah.
generation.
There's a lot of concern at both ends of the market I'm seeing now, the labor market. It's the big corps going after the cheap labor, whether it's a Tim Hortons. But
Yeah.
I'm hearing a lot now about a lot of people expecting that first white collar job in
Hmm.
just not getting it and not
Yeah.
getting it at the prices they'd expect. So I think that's one aspect of it. But back to this idea that, why do Canadians think that a rate cut will turn into, a stimulus for the housing economy? Well, that's because it worked like that for a very long time. And Stephen, I know that, Steve, that's something you're really interested in. But finally, we have from the Bank of Canada saying that they are going to start looking at their mandate review to include the impact of their interest rate actions on housing affordability. This is a long time coming. And I know it's something that I believe, Steve, you testified to Parliament about.
Oh yeah, I did. Yeah, that was a long time.
So, what are your thoughts on?
Yeah, maybe that was a while ago.
Yeah.
Yeah, I don't know. I don't know how much of this is just talk. I mean, obviously, like John, I mean, the craziest thing was like when the Bank of Canada was effectively ignoring interest rates, national home prices. The home price index, I think in 2021, I think increased by 27%
Yeah.
in a single year. I mean, it was absolutely bananas. And like there was just, oh no, we're gonna leave rates. And it was basically but the first rate hike was in March of 22, which was literally like a month after the housing market had already peaked.
Hmm.
So, like, I just don't think they're necessarily forward looking or didn't have home prices reflected in their market assessment of inflation, right? They're like, oh, well, inflation is subdued. And I was like, guys, you have 27% home price inflation and rents going up double digits in every single market. Like, so yeah, I mean, I think it will probably be welcome news to most Canadians because I think housing is such a large part of people's CPI basket. At the end of the day, it's a necessity that you need to have it to live in. So why the Bank of Canada hasn't paid more attention to it in the past is beyond me, but I mean, hopefully that changes in the future.
John, maybe you can unpack this for our viewer a little bit. There was a widespread consultation on, I believe, a couple years ago, whether
Hmm.
the mandate review should include things like housing costs. I think led then by, was it our finance minister? I'm not sure who was leading that, Freeland. But it seemed at that time there was a decision no. And now I feel like this is one of the first times we've heard the bank say opposite. What do you think?
I mean, it's a tricky question. I mean,
Mhm.
Canada's not alone in this. I mean, no country in the world really includes housing. And like for people to understand, housing is trickier than other things. Like CPI, our inflation is meant to, of course, track how our expenditures are changing on the things that we consume, right? Uh, it's a lot easier to do that when we're talking about rental housing because you can track how rents are changing. But owner occupied housing is a little bit different because, part of it is obviously housing that we consume, but it's also an investment, right? And this is the tricky part about it. I mean, it's not meant to track how our housing investment has been taking off, over the past 5 years. So it is tricky. Canada's approach to tracking it is a bit different. Like in the US, for example, the way they track it is they just basically assume, when you look at owner occupied homes, they just assume everyone is renting their homes. So they have they call it like a rental equivalence. And they're basically like, well, what would it cost you if you were renting your home? That is what we're going to take into account in our housing price inflation for the CPI. So yeah, it's important. They need to, I don't know how they're going to include it in the index. They do obviously need to be mindful of it. I don't know how they're going to include it.
I
Steve?
wouldn't. Yeah, I know. I was just gonna say I wouldn't hold your breath, but I mean, to John's point, it wasn't just the Bank of Canada. So the Fed, the Federal Reserve in the United States was buying, back in 2021 was buying 40. Was it how much was it? 40 billion. 40 billion in mortgage-backed securities every month in 2021. So effectively what that means to the listeners here is like basically the Federal Reserve was buying mortgage-backed securities, trying to influence mortgage rates lower in the United States when home prices in 2021 were growing by 20%.
Yeah,
So
100%.
just to give you an example, right, of like sort of forward guidance or like forward thinking, like these guys were still actively trying to influence mortgage rates as home prices were rising by double digits.
Mm-hmm.
And it
So
does
every
seem
central bank was making terrible mistakes.
Yeah, for sure.
well, because housing is such an important issue, right? So they're trying to stimulate the economy on one hand, but then try to not stimulate or absorb that on the other. But the what this does mean, and this is what Steve was concerned about, is when you don't take into account that the cost to buy versus rent plummets when you have very low interest rates, which through all the crises, past 2008 and through pandemic, we've seen it does lead into this really strange run up, and in housing affordability for the newest entrants of the market,
Mm-hmm.
not necessarily the existing owners
For
of
sure.
housing who
Yeah.
have a balance sheet to consider. How much is your asset inflating against your cost? So
Yeah.
maybe they need to factor in the cost of a house for the first time home buyer. I was thinking about it. How could you try to add that to the basket in a way that might make a little bit more sense?
Yeah.
And maybe they could try to measure it that way.
It is, yeah, it is tricky to include, but like to Steve's point, and he's 100% correct. And I think this is why I think I push back on a lot of what I think are ridiculous narratives in Canada, like the housing is just a supply issue, treating homes like widgets. We need to build more. Again, what is often missed in this discussion, I know Steve talks about this a lot, is, the demand for housing is highly correlated with the availability of credit. The more debt and a credit you dump on the market, the lower rates go, the faster home prices increase, right? So it's not just about how many homes we build. We had this run up in prices, not because we're not building enough homes, because debt fell to like 1%,
And the
right?
demand increases. So
Yeah, of
it's that
course.
because housing demand is such that we could all want more, but unless we have the cash to do it, we can't do it. Right. And so that's
100%.
that
Yeah.
thing that's very interesting.
Yeah.
So moving on to maybe a direct correlation of where we saw that impact the most, condo market making big headlines
Mhm.
in Toronto this week. McLean said a huge articles. John, you were quoted in it.
Mm.
And they're just noting that we are seeing in Toronto's condo market, low interest rates fueled a big city condo flipping frenzy. Profits got bigger and condos got smaller. Now the bubble is popped, leaving behind many thousands of unsellable, unlivable units. And our federal housing minister is now chiming in. I believe the former mayor of Vancouver. We were in a housing bubble. Robertson said following a tour of Oak House, a new University of Toronto residence, there's far too much condo product in both Toronto and Vancouver. That type of housing was overbuilt in recent years and it's not selling today. Robertson said, so there's a market correction that many predicted years ago that we're in a housing bubble.
Our
So the current
government didn't predict years ago. Our government didn't say we're overbuilding. Our government didn't tell us we have too many micro condos. Be cautious. It's a bubble 2 or 3 years ago. No, they didn't. CMHC didn't. No one did. It's a bit rich now to be calling it. I mean, it's kind of very frustrating. I feel like just watching and listening to all this nonsense because, I mean, yeah, obviously with the freaking bubble, man, you didn't need a PhD to sort that out. If you saw what was going on the ground, and listen, I am partly pissed off at our government because the job of our government, of our housing agencies like CMHC, you would imagine, are to like raise the red flags. Saying this market looks speculative, raise the risks, raise the red flag, try to cool the speculative boom, but they didn't. No one did. No one did. They
One question for you, John. I remember you wrote, again, back in about 2007, you made the observation that pre-construction was selling at a higher premium and how strange that was.
Yeah.
It was flipping the normal metric on its head, where
Mhm.
normally you would not pay a premium to tie up your money at risk in a
Yeah.
project that's going to complete in the future. And you were seeing that in 2007. I do remember you predicting a condo collapse or bubble then. But you didn't turn out to be right until many cycles later, because what seemed to happen is one crisis after another would kind of like step in and save the day as the
Mhm.
interest rates would go down.
Mhm.
So do you think what happened is a lot of experts stepped away from the idea that long term there's going to be a return to the mean?
So
And they got caught up in these very short, tight circles where it seemed for a while Canada was avoiding that collapse.
So I don't know. I don't remember exactly what I said
I'm
in
calling you out.
2007.
I'll find
I
it.
know that I recall I've called Toronto a
Yeah.
bubble twice, and it was in
Yeah.
2016 and 2021, I think.
Mhm.
Regarding 2007 or 2000, yeah,
No, yes. Then you just noticed an acceleration. You
listen,
noticed an unusual change in the market.
100%. It looked like people were paying premiums. You saw people lining up. You saw people fighting outside of sales offices. Yeah, so it did have this very speculative mood,
Mhm.
sentiment, all of these types of things like that. But of course, when the US collapsed, our housing market didn't, right?
Yeah.
And the challenge again is it's not just because things look speculative, it doesn't mean they're going to crash tomorrow. At the end of the day, they didn't crash in 2010 or 2007 and 2012 because when those calls were completed, because we're still undersupplied. We weren't building rental housing. This filled the gap. And at the end of the day, over the next 10 years, our population exploded, right? So you can't really predict these things 10 years in advance what our population is going to look like in the future. So yeah, like it's impossible to predict what is going to happen. But like I said, I think when I say it was obviously a bubble, I mean we're talking about I'm specifically referring to like the booms where prices were going up 20+% when pre-construction condo investors were paying 40 to 50% more than existing resale units. Completely irrational, right? So yeah, and again, I've got to be honest with you. Even in that moment, you're 100% right. And what I would write about it, I'm not so strident. I didn't predict a crash because you can't predict it.
You
If
didn't. Yes.
I
You would
didn't
always
because
tell, and we had a lot of negative comments on that fact. I do remember predicting crashes
yeah,
at 2007 at various points. But to your point, it seemed who could have known in 2007 as we got into the condo frenzy that by 2008 we would be in this global financial crisis
yeah,
necessitating again those it was deemed rock bottom interest rates.
yeah.
So back to Steve, it just seems like every time we were about to get a bit of a correction, we'd either have a rock bottom interest rate or that hockey stick explosion in population that happened under the last Liberal government. Something would always come along
To save the day.
so that, yes. And so, I really do think it set up that kind of thinking. And Steve, I'm wondering what you think might happen now if we are absent all those conditions.
I just wanted to
Will
quickly.
will we see that bubble collapse the way people are saying?
Uh, I mean, I've got a few thoughts. I think one thing, just to John's comment on like the timing, just to give people an idea. I think everybody knew it was like a speculative frenzy, right? I mean, the Bank of Canada said go out and borrow money. We're never going to raise rates. The amount of flipping we were seeing, the pre-sale activity, the craziness, people lining up, 100 pairs of shoes at the open houses, blind offers, subject free cash. No, like, everything, all the signs are there. It's always just like getting the timing of like, okay, when is it like when you hit peak and when does it just roll over? And so I'll give you like one example. I had a client, and he was a relatively sophisticated guy. Uh, we saw sort of like the zero interest rate policy. This guy's smart. He manages money for a living. And so we went out and we bought a house for his family to live in the suburbs again, which was one of the suburban markets that really accelerated. So he bought in November of 2020. Not necessarily a great time to buy. Everything was in multiple offers. He bought this house for 1.24. Okay. At the top of the market in 2022, probably trades for about 1.8. Now it's come off quite a bit. I'd probably say it probably trades today at 1.6. So like even though he's still got a ways to go to get back to what 1.24 that he paid. And this guy I don't think he necessarily bought it at a great time, but it's just like the price is just like literally accelerated. I think they went up, I don't know, 20-30% after he bought, because the price was literally going up 5% a month until eventually you had sort of this blow off top and then it all kind of rolled over. So I think just getting the timing of that is very difficult. I remember like back in 2016 when the detached housing market peaked in 2016
Mm-hmm.
because we had the foreign buyer tax coming in, and all was like, wow, like the market basically tanked. I remember telling this young buyer, I was like, oh well, don't need to rush in. We've had this foreign buyer tax. Clearly the market's starting to trend in a different direction now. And she was looking at the condo market, and it was in 2017 condos went up 20%. Right? It's like the detached market had just peaked because all the foreign buyers stopped, but everyone just basically piled into the condo market and it still went up 20%. So I think getting like the timing, even though it's a speculative frenzy in a bubble,
Mm-hmm.
Mhm.
it's
And
hard to
yeah, and
pinpoint.
John has
Yeah.
always been really consistent on that. And I think that's the interesting part. So I'm going to push you guys both right now. What do you think now? Everybody's saying unprecedented situation for these micro condos.
Mm-hmm.
Are we going to unlivable and unsellable? Those are strong words in that McLean article. John,
I
what do
mean,
you think?
it's hard.
Does it lead into a collapse, or no, something will come along?
Again, it's so
You'll
hard
never
to
know.
predict
No.
because we don't know where rates are going to be. We don't know what our government's going to do on immigration policy. We don't know what they're doing on foreign investment. Like, there's so many freaking variables, right? Like right now, yeah, it looks like there's going to be a lot of downward pressure on prices and probably even rents for the next little while. Um, so yeah, I don't think there's going to be any rush of people buying 500 square foot condos, anytime soon. But again, like I said earlier, I mean, I was just trying to remember. There's a great quote from John Maynard Keynes, I think, who said that the markets can stay irrational longer than you can stay solvent, which is true. Like, you cannot predict it. Things can be irrational for a very long time. You don't know what's going to prick it. And in Canada, it was a lot of things. Obviously, it was interest rates. It was a shift in immigration policy, which changed sentiment and optimism about the market. You know what I mean? And again, we had this mood that it doesn't matter what price that you pay. We have a housing shortage, so prices will keep going up forever, right? And obviously, that's all collapsing now. You have our government saying, even CMHC saying that there's a risk of oversupply now, right? So I don't know. It's impossible to predict, but yeah, I think we're gonna have. I think we're gonna have probably a sluggish condo market, especially for small units for a while.
And to
I think
both of your, oh, sorry, Steve.
sorry, I just wanted to chime in there. Again, I'll be like John, I don't know the future here, but I'm super big into like sentiment. I
Hmm.
just think I find sentiment so fascinating, and that's something I always try to like look for is sentiment. Because I always find that like if you can kind of like take the opposite side of the prevailing sentiment, like in general, I think you'll do pretty well. Which is to say, like, there's 100 pairs of shoes at the open house, like it's probably not a good time to buy, right? Like when everyone's telling you at the barbecue that they just bought like their second or third condo, and I think I look today, John, it's like the front cover of Maclean's magazine is talking about the big condo crash. Like there's so many like articles and books written about like, oh, if it's on the front page news, like it's typically already baked into like consensus and sentiment, which is to say, like, I think consensus today, everyone will tell you, like, oh yeah, it's gonna get worse. Oh yeah, like the market's really bad. Like, don't buy a condo. So like, I'm not saying that like this is the bottom, but I just find like I think from a sentiment perspective, like I don't know, it's probably not the worst time to take the other side of that sentiment.
Yeah, I mean
Uh,
it's an and listen, I agree. Even though I don't think the market's going to recover anytime soon, I think Steve's 100% correct. When going back to the whole investor question, yes, I'm starting to get more people talk to me about thinking about investing, and not necessarily right now, but thinking about when is the right time, and not trying to time the bottom perfectly, but just starting to explore the possibility of buying a condo for their kids, so on and so forth. So to Steve's point, yeah, the market's not going to be, we're in really terrible sentiment phase right now. And whether this lasts 6 months or 24 months is anyone's guess, but eventually the market's going to recover. And not, that doesn't mean it's going to go up 10% per year, but I don't think this idea that real estate is a terrible investment is just going to be with us for the next 30 years. I think eventually people are going to want to invest again.
like
Yeah.
all the reasons to list for like the market getting worse, they're so easy to list.
Mhm.
Like it's like the easy, it's like the most compelling argument to make is like, oh yeah, of course it's gonna get worse.
Yeah.
Like there's no immigration, the labor market's soft, probably gonna get worse. You know, inflation's starting to tick back up. We've got record number of units coming to completion, rents are falling, like foreclosures are rising. So I just think like it's just like everybody kind of knows this. I don't know. I think I don't know how much information of that is already in the price, but to John's point, like yeah, I wouldn't sit here and say, oh my God, like tomorrow you're going to be in a, next year you're going to be in a bull market. No, but I think I would argue today is certainly a better time to be buying than 3 years ago. Um, I think, I don't know how to predict it, but I always look and say, like, people say, oh, is now a good time to buy? I'm like, well, again, it's certainly a better time to buy than 3 years ago. If you look at like, a lot of people in Canada, like the Bear accounts, will say, "Oh, this is like Canada's like global financial crisis moment. This is our 2008." And it's like, okay, like let's just play that out. U.S. home prices peak in '06. They bottom in 2012. So you have a 6 year correction. Um, I would argue that we peaked in 2022. We're 3 years into this correction in 25. Yeah, maybe we do have another 4 more years to go till you hit bottom. But like if you bought if you bought in 2010 in the United States, I don't think you were necessarily mad about your purchase, even though home prices technically fell for another 2 years.
Not in the end. That's why I've always called John like the Goldilocks of real estate. Like one thing he's always sort of taught me to think about is when the herd is running this way and it's so obvious this is going to happen, look at some of the counter facts.
Mhm.
And if you're still comfortable making that decision, do it, but look at the counter facts. So
Mhm.
now the herd is running the other way. So
Yeah.
it's all going to go to, the other way. So again, look at the facts and see what could happen tomorrow to change sentiment.
Mhm. And I think
And
we're starting to see that. We talked about it at the top of the show. I think this is why we're starting to see more buyers jump in particular in the low rise market, right? Yeah. You?
Sorry, I'm raising my hand in the background here.
Yeah.
I just wanted to give like one last example. So I started buying just investment properties. I'm actually I kind of do like small like redevelopments in Calgary. And so I remember I had a good friend of mine. They were a really successful family. So like he was like, he's telling me he's doing these little developments and he's picking up like eight caps in Calgary. And I just remember telling people in like Vancouver that I started buying in 2019 there. I just remember like telling people that and like the look on people's face when you like, oh, I'm investing in Calgary. It was just like, what are you doing? It was like you're just a total idiot. It's dead money. The prices hadn't moved for 10 years. It was 10 years of dead money in Calgary. And just like the weird looks that you get from people, I always found I was like, oh wow. And then you know what, John, 3 years later, when you start hearing of all these Toronto pre-sale brokers pre-selling condos in Calgary, Like from a sentiment perspective, like that's probably when you have Toronto agents selling Calgary condos, it's probably the time to run in the other direction.
Yeah,
Like it's
100%.
just sentiment. Like I just think that the signs are there. It's hard to go against the herd.
I mean, yeah,
Perfect.
go ahead.
I was going to say perfect segue into something that Steve tweeted recently about this question of investment.
Mhm.
Um, and I'm just going to pile on maybe one person on the negative. Steve, you retweeted billionaire, I believe a hedge fund giant, Ray Dalio,
Oh, yeah.
saying that my view is buying and holding real estate is not an effective investment strategy in our current economic environment for a few reasons. And he goes on to mention them. Real estate is more interest rate sensitive than it is inflation sensitive. It's a fixed asset that's easy to tax, which limits the ability to diversify. And real estate is nailed down, so investing in it makes it more difficult. So that's their view, and they ask what others think. Now, would you think that's part of the reasonable side of the argument, things to think about when it comes to your
Sure.
investment portfolio, or again,
I
a
yeah,
bit
no, I
too
think so. I think
one-sided?
I mean my view is like, and John, I'm sure you probably share the same view, which is like real estate has outperformed, at least in Vancouver and Toronto, has outperformed spectacularly over the last 20 to 30 years.
Mhm.
It's probably likely it's going to underperform over the next 10 to 20. Like, you know what I mean? I just think it's all sort of like it all swings, like the pendulum always swings.
Yeah.
And I think we've just had such incredible outperformance that, yeah, I think it's likely that it should underperform, especially specifically when you look at all these governments and the debts they have, whether it's at the municipal level, city of Toronto or the provincial government, or even now the federal government. Like all levels of government are looking to basically raise tax revenues to, appease these massive budget deficits that they're running. And real estate is the obvious one. Yeah, you can't move it. It's easy to tax, and there's so much wealth and capital gains that have accrued there that I just think it's an easy target.
Yeah,
So
I
I,
mean,
I would I would agree with Dalio personally.
like in this environment, I mean, I think that's the key thing to preface this with, and that's what he's saying. Like in this environment, which is this higher interest rate environment, yeah, he's probably right. It's probably going to underperform. I don't even think that's a bad thing. I think it's a fantastic thing. I mean, I think
Yeah.
if we get to a point where home prices are going up 2% a year, 3% a year, just over, and that would be great. And to be clear, you're still going to get some investors. They're going to be like the old school investors who are fine with a boring investment with modest gains that they're going to hold for 20 years rather than every person borrowing from their HELOC to buy a pre-con condo. Like, you know what I mean? Like, that's what you
Yeah.
get. And you're going to get probably more investors building rental housing. Government's going to be putting a lot of incentives towards that. So I think it's fine. It's very likely. And again, a lot of this is just driven by this today's economic conditions. 5 years ago, everything can change with
But again,
Well,
John,
you
it's just like the pendulum swings, right?
keep
Which is
saying,
to say,
yes.
like, again, look at the pre-sale condo space. I mean, that was the market that outperformed for the last 15 years, right? It's like if
Mhm.
you were invested in pre-sales, call it futures contracts, like you made a ton of money. You put down 10%, and in 3.5 years when it completed, like you made a ton of money with like, and I think that market specifically today is now being like the hardest hit, where like the numbers make zero sense. And anyone that's invested in pre-construction condos starting in, call it 2021, is going to underperform. And that segment probably underperforms for at least the next decade.
Mhm.
here would be my only question for Dahlia, though. When I look at the alternatives, about where else to invest, you
Mhm.
know, I tend to think, okay, fine, you may have a blue chip investment versus then a skyrocketing one. But look at the other alternative. I could invest my money right now in a lot of sectors that may be bubbling.
Mhm.
Is there an AI bubble?
Mhm.
How long is this going to last? So there's a lot of tension on the other side. And I keep coming back to you can't live in your stocks. And I just really do wonder about that human behavior element around housing and whether that's being a little bit under accounted for there.
Yeah, I mean, listen, you're right. I mean, in this environment, I'd still rather invest in real estate. I kind of know it. I'm fine with underperforming. At the end of the day, like I'm kind of like the whole long-term boring investment idea.
Mhm.
You know what I mean?
Well,
So,
yeah, and I'm someone that's kind of done something different, to
yeah.
my parents, but I can't deny the strategy of that home ownership.
Mhm.
Whether now taking those proceeds and investing in your kid's flat or, doing
Mhm.
that second move, you may think about it, but I don't know.
I think
I don't know
well,
if
I think
it's,
the biggest challenge, I think the biggest thing, and I've like pushed back on this for years and years and years, is John, you see so many people, so many parents instilling what worked for them.
Mhm.
Yeah.
We bought a house in the 1980s and rode interest rates from 20% to zero, and we made millions of dollars. You should do that too.
Mhm.
It's like, okay, well, rates are at zero. They can't go down anymore. So like it's just a different trade. And
Mhm.
the fact of the matter was they basically, I think a lot of parents naively instilled this on their kids, which is like, oh, let me help you. Let me give you $200,000 to get into the market. And like you should lever yourself up to the gills as well to basically ride this train. And I think that strategy is not going to work like it used to.
All right. You're
Yeah.
making me
And
feel better because the truth is probably somewhere in the middle then,
yeah,
even
and
if I'm
Steve's
not
point is an
heavily. Yeah.
important one. I mean, we're thinking about housing as an investment, but the challenge is
Hmm.
for most of us, it should be your principal residence, right?
Right.
And
A
and
different
maybe
kind of
a different
investment.
kind of investment. But the
Mhm.
challenge is, as Steve said, yeah, when you hear about, boomers talking about how things were hard when I bought a home too.
Mhm.
Yeah, okay, fine. But the houses were 3 times household incomes back then. Today in Toronto, they're like 9 to 10 times incomes.
Mhm.
Vancouver, they're probably 12 or 13 times incomes. So when you can only borrow 4 to 5 times your household income, it's a lot harder to buy a house in today's environment, right?
And
And
I'm
again,
never sure if they mean like, is this the pro renter market, like just rent and put all your money in the stock market? You've heard that. I heard that, years ago as well. So it just seems like there's real ends of that,
mhm,
continuum,
for sure.
and that it's probably sliding a little bit in the middle. But
Canada's moving into effectively a rental dominated housing market for the next 5 plus years. It's basically all we're going to be building. So,
wow.
and it's going to shift
Mhm.
a lot of things in Canada. So we'll see how that all plays out. Maybe we'll chat about that in another show.
Yeah, because I have to hold your feet to the fire. People
Yeah.
can accuse me of being soft on you guys. You're real estate agents.
Yeah.
And real estate agents and brokers got a real black eye
Do we?
in Ontario
For what?
this past week. So I
Oh
shouldn't
my.
smile because it's something that I think, John, you hold really close to your heart in terms of how to steward a brokerage well. And what happened in Ontario apparently is iPro Realty, one of the biggest ones here. Apparently, the RICO, the self-regulating body that's arm's length from the government's oversight, went in and saw that they had borrowed,
Mhm.
aka stolen, $10 million from their consumer trust accounts. This is
Mhm.
the money when people are buying and selling, and the brokerages are holding that money for you before
Mhm.
releasing. They are heavily monitored. You are not supposed to touch that in any way or form. Apparently, 10 million of that went missing. The RICO
Insane.
regulator decided to just give them basically a slap on the wrist. Sure, they took their license to trade real estate, but only the two principals. And they didn't even have to pay back all that money to make it go away.
No, it's criminal. Yeah, it's criminal.
The media caught wind of that just a couple of weeks ago, and it's turned into a full-blown scandal.
Yeah, so
John.
at a high level, so what they basically did is every brokerage holds money in their trust accounts. They hold consumer deposits when buyers buy homes, and then they hold commissions when they're, paying other brokerages, paying their own agents, things like that. And this company just was short on cash, couldn't afford their mortgage payments or whatever, and just took $10 million from their trust accounts. Obviously, a huge scandal, largely because, like you said, they went out with basically no penalty. So this is being investigated. A lot of people are calling for the entire board to resign, the CEO to resign, and for the government to just put in a new organization. Obviously, if you can't self regulate, why are you going to have a self regulated real estate industry? So
Premier Ford threatening to step in and control it harder.
Yeah.
Steve, have you heard any blowback about this scandal in Vancouver? I know that industry has
No.
its own black marks on the industry around, I know, money laundering and other concerns, but
No, nothing here. I think that
gosh.
I don't know. It feels like there's a new one of these every couple of years, and
Mhm.
we've certainly had our cases in BC, more so back in 2016 with a lot of the foreign capital flight coming in and some of the shady brokerages that began operating.
Mhm. And that was a case
Yeah,
of
I think it just
laundering, right?
yeah, I think it
Steve?
just hurts consumer
Yeah.
And
confidence,
to be
consumer
clear,
perception of the industry.
I wouldn't be surprised if there's more brokerages in this situation. I'm surprised it took this long for brokerage to go under. At the end of the day, we've been at 3 years with pretty much 20-year low in sales volumes, right? That is hard for a lot of brokerages to handle because their revenues cut significantly. And the challenge with a lot of these brokerages, they have a lot of fixed costs, their rents, their leases, their office space. Their costs don't go down, their revenue does. And this is basically what put them in this position, most likely. And I wouldn't be surprised if there's other brokerages that are pretty vulnerable.
Mhm. Well, John, I have a long memory, and sometimes it must be very irritating as your editor. But I do remember this happened right after the 2017 collapse,
It
where
did,
you
yeah.
were being quoted on another brokerage out in the outer GTA
Yeah.
that had taken off with its consumer trust
A lot
money.
less money, yeah.
A lot less, but it was because of the bubble collapsing
Yeah,
and then the market just dying and they couldn't make their money. So you are all correct. Now, in latest news, John, you will be in Edmonton soon.
Oh yeah. I mean,
For our
as we're
Edmonton
wrapping up.
viewers and
Are
listeners,
you selling pre-cons over there?
he wants you to
How did
attend
you
a
know?
special
The
seminar
market's
on
slow here.
on investing.
I hear the market's booming in Edmonton. We got to make some
Yeah,
sales.
it's the last market standing.
I know. No, I'm chatting about missing middle housing. So, I mean, you're going to go out there, obviously learn a little bit about their market because they're obviously doing a ton of infill, multiplexes, stuff like that. So, obviously, see what we can learn from there and then chat about issues and challenges and stuff like that about infill housing. So, yeah.
So Edmonton viewers, listeners, can they catch you at this conference, John? Or
It's
is
gonna
it,
be
yeah?
yeah, exactly. I'll tweet about it. I don't have all the
Okay.
details
And
yet.
we'll
Yeah.
put the link in our show notes.
Yeah.
Steve, everybody loves hearing from you. Any appearances coming up? Any places your fans can see you?
No, we'll be working on like a Vancouver event for October, late October, just kind of working out some of the details. So,
Lovely. Is that the Loonie Hour?
yeah, we'll have a sort of another live event towards the end of October. So to be
Well,
TBA.
it's already
Beautiful.
September. So come on, start marking these down in your calendars.
The
All right.
last
So
minute people.
All
yeah,
right.
a good chance for our listeners and our viewers to catch you guys live. Thank you both as always. And to our viewers and listeners, keep your questions and comments coming. And we'll catch you again next week. All the social links for John and Steve will be in on our show notes, so you can reach out personally with your thoughts today.
Beautiful.
Thanks.
Till next time.